General Electric was once the ultimate symbol of American industrial power, spanning everything from light bulbs to jet engines. For decades, GE stock was a staple for investors seeking stability and growth. But the company has undergone a dramatic transformation in the past 20 years. The 2008 financial crisis exposed major weaknesses, especially in GE Capital, forcing a massive restructuring. GE shed non-core businesses and refocused on its industrial roots. Today, GE has split into three separate companies: GE Healthcare, GE Vernova for Energy, and GE Aerospace. For investors, the story is now all about GE Aerospace, a leader in aviation technology. GE Aerospace builds and services engines for commercial and military aircraft worldwide. The old conglomerate model is gone. What remains is a focused aviation powerhouse. Investors are no longer buying a diversified giant, but a company with a single mission, shaping the future of flight. This clarity allows for smarter investments and a more transparent story for Wall Street. GE Aerospace is now a pure-play bet on the future of aviation. The company's streamlined focus means more accountability and better capital allocation. For modern investors, understanding GE means understanding its aerospace ambitions. The GE of today is all in on defining the next era of flight. GE Aerospace's latest earnings show strong momentum. In the most recent quarter, revenue jumped 16% to $8.9 billion. Net income hit $1.3 billion, with adjusted EPS of $1.18, beating expectations. Growth was driven by both commercial and defense engine demand. The services division saw a sharp 20% increase as global air travel rebounds. More planes in the sky means more maintenance and steady cash flow. Free cash flow reached $1.4 billion, giving GE flexibility to invest, pay down debt, and reward shareholders. These results highlight the company's operational discipline and financial strength. GE Aerospace's focused management is delivering on its promises. GE Aerospace has re-established itself as a reliable choice for income-focused investors. The company now pays a quarterly dividend of 28 cents per share, or $1.12 annually. This payout is designed to be sustainable, backed by strong free cash flow. The dividend yield is competitive within the aerospace sector and leaves room for future growth. Management is committed to a progressive dividend policy, balancing shareholder returns with investment and innovation. CEO Larry Culp emphasizes disciplined capital allocation. First, invest in the core business. Second, pursue strategic acquisitions. And finally, return excess cash to shareholders. This clear approach reassures investors looking for both growth and income. The payout ratio is conservative, signaling potential for increases as earnings grow. Share buybacks may also supplement dividends over time. GE Aerospace's capital strategy is transparent and built for long-term value. GE's breakup created three focused companies, with GE Aerospace now a pure-play aviation leader. The company's flight deck strategy centers on commercial engines, defense, and next-gen technology. Its massive installed base of over 44,000 engines drives high-margin service revenue. On the defense side, GE powers key military aircraft and is developing next-gen propulsion for future platforms. Innovation is crucial. GE is investing in sustainable aviation fuels, hybrid electric, and hydrogen engines, aiming for major efficiency gains. This focus on technology and sustainability positions GE Aerospace for long-term leadership. The outlook for GE Aerospace is strong, with management projecting double-digit revenue growth for 2025. Wall Street analysts are bullish, citing the company's dominant market position and predictable service revenue. The spin-off has simplified the investment story and removed distractions. Risks remain. Aviation is cyclical and sensitive to economic downturns and supply chain issues, but GE Aerospace's clear strategy, strong balance sheet, and proven leadership offer a compelling case. Investors get a focused, best-in-class aviation company with global reach. The main risks are macroeconomic and industry-specific, but the opportunity is significant. For those betting on the future of flight, GE Aerospace is now a pure, powerful play.